I would jump in here and talk to you guys, share some information that was recently shared with me by one of our amazing Billionaire Boardroom members and a really good friend of mine, probably one of the smartest guys I know in the real estate space. He is doing a great, great deal of business. He has a background in finance and banking, and has really done the research to understand. There's a lot of questions out there with people asking, hey, Kent, what is going to happen in the market? Are we going to crash? Are we, what should I be doing as a real estate investor? Let me get my comments here. I'm trying to get them on board here. Okay, here we go. And so I wanted to share with you exactly what's going to happen over the course of the next few months, why we believe it's going to happen, and just as importantly, what you should do about it. So pay close attention to what I'm going to share with you. There are a lot of things that are going on at a macro level, at an economic level, that really, really matter and are going to have a significant impact on your business and what you should and should not do. So as it relates to the business, I would tell you that the one thing I want you to keep in mind, and again, this is stuff that Robert Heyder deserves all credit for this. He is the one that shared this with me, is that this is the very first time in the last 50 years that a real estate run-up, effectively this huge run-up we've seen in prices, this market escalation that we've seen, it's the very first time it has ever been driven by supply. It is almost, any of you that were around in the last recession and last housing boom, if you will, realizes that was all driven by demand. This one is driven by supply. What do I mean by that? Well, here's the bottom line. Since 2008, 2009, our country has produced 300 to 400,000 fewer units, fewer housing units that are needed. And we have continued to do that year over year over year. Right now in the United States, we have a shortage of somewhere between 3.8 million and 4 million housing units that we need to get the supply back up to where it should be at normal levels that just simply don't exist. Right. So that is a huge, huge driver of what's going on in the market. And by the way, as you're coming on, just go into the comments and say hello. Let me know what city and state you're coming in from. I'll shout you out and say hello. And again, so number one, we have a massive supply. We just simply are not getting the units out that we need to get out. And that problem is continuing to exacerbate itself month over month, year over year. Again, 3.8 to 5 to, probably 4 million units. The supply chain for actually building new units right now. So they're just, in a perfect world, if we wanted to go out and build 3 million, 4 million, 5 million houses, if we could just wave a magic wand, the supply chain has been so severely disrupted right now that it would be virtually impossible for that to happen. And in fact, the supply chain, as we all know or have seen out there, is so disrupted that prices are escalating at an alarming rate. For those of us that are in the industry, you know that during the summer, lumber was one of the things that just took off. It has since kind of settled down, but you see how the supply chain impacts our ability to actually build and get houses out the door. The second, or the other thing that is really impacting this right now, is just skilled labor. As of today, we have millions of skilled labor people that were pushed out of the market during the Great Recession and pushed out again during the pandemic, and have not returned. And so just to address that issue, think about this for a second. If you were going to try to go and hire 1 million people and put them into the workforce today, and I'm talking about HVAC people, electricians, skilled labor, right? Roofing, carpenters, people that actually know how to get this done. I'm not talking about your damn handyman. I'm talking about like somebody who really knows how to do what they're doing. If we were going to do that, what would be the process in getting that done? Well, they have to go to vocational school. They have to have an apprenticeship. They have to get licensed, right? Bonded, insured, all that. And that entire process in and of itself takes a couple years minimum. So even if we wanted to get those people into the market right now, new people into the market, it would take a couple years, which again, more disruption, more slowing down of supply, more opportunity for the price to continue to rise. Now you double over the top of all of this, the fact that 25% of all dollars in circulation today were printed just in the last 2 years, right? The inflationary aspect of that is shocking. That your dollar today is the most valuable that it will ever be. Tomorrow, it will be worth less. If you are sitting on cash in the bank, then you are a fool because your dollar is literally dropping in value faster than any bank rate, that any interest they're paying you could ever keep up. And so your dollar today is worth less, which means it doesn't go as far as it used to go, right? Period. What you could afford a year ago, 20 years ago, 50 years ago for that same dollar is significantly different and will continue to go in that direction. That on top of now put into the equation that minimum wage is raising up, which means that is going to push more buyers into the market and more renters into the market, again, driving up more demand. The bottom line here, guys, is there's nothing, literally nothing at a macro level that would indicate that there's anything going to slow down this market the next 2 to 3 years. There's just no logical way for that to happen, right? Demand will continue to rise. Supply will continue to shrink. Supply will continue to be harder to get out into the market, and the dollar is deflating by the second. So what should you do? Well, very simple. You have to build a machine. For those of my wholesalers that are out there and my real estate investors, you have to build a machine that is continuing to create opportunity for you, continuing to wholesale deals, continuing to bring the cash in at a high level, taking that cash and acquiring cash flowing assets. This is the cheapest real estate is going to be today. This is the cheapest it's going to be for the next 2 or 3 years, period. It is going to continue to rise. I live here in San Diego, California, right? Prices have gone up 23% in the last year alone, 23%. Now imagine that continuing on this trend for the next 2 to 3 years. If I buy today, there's this massive wave of appreciation that I'm going to be able to potentially ride. But one of the few times you'll ever hear me talk about appreciation in that way. But the reality of it is, from an economic standpoint, I have a responsibility to tell you guys that that's what's going on. If you want to ride this wave, you have to get in the game. If you are somehow sitting on the sidelines, believing at some level that the prices will drop sooner rather than later, I'm telling you, it's just not going to happen, period. So you have to get in the game today. This is why, if you're an experienced real estate investor, you see your competitors like Open Doors, Zillow, OfferPad, whoever, why they're coming in, hedge funds, and effectively paying list for houses, right? It looks and feels like they're paying retail for houses. And a lot of you are scratching your head trying to figure out, oh shit, why are they doing this? I don't understand. I can't compete, because they have the information that I just shared with you. They clearly have a line of sight and understand that the market is going to keep moving up for the foreseeable future. So they are literally buying at the cheapest prices today, which is exactly what you need to do. I would highly, highly encourage you guys to go use this information, to go, again, make sure that you have the machine that is bringing opportunity to you day after day after day. And if you're a wholesaler, that you got this machine that is helping you do 3, 4, 5, 10, 20, 30 deals a month, and taking that cash and deploying it. Do not allow that cash to sit on the sidelines. Do not get your cash into real estate as fast as humanly possible, because real estate is a hedge against inflation. Think about it. While your dollar has gone down, right? If you took the same dollar and it was stored in an asset like real estate, what happened to that dollar? It went up in value. Real estate is a hedge against inflation. So get your money into real estate as fast as humanly possible. If you guys need any help with any of this in any way, do not be bashful. Simply reach out, hit me up on Instagram at Kent Clothier, hit me up right here in the comments. I'll be happy to comment back. And I will see you guys next week. Peace.